President Trump just posted something on Truth Social that sent Wall Street into complete panic mode.
These are
I'm talking about grown investment bankers literally having emergency meetings at 11 p.m. on a Friday night. Trump announced he wants to cap credit card interest rates at 10% for one full year. The banking industry is absolutely losing their minds. But here's what's really wild about this whole situation. The controversy isn't even about what you think it is. Everyone's talking about whether this helps or hurts consumers, but that's not the real story. The real story is about a $100 billion wealth transfer that could happen overnight. And most Americans have no idea they're sitting in the middle of the biggest financial battleground in decades. And when I show you the math behind what's actually happening here, you're going to understand why credit card companies donated heavily to Trump's 2024 campaign and are now scrambling to figure out how to stop the very person they helped put in office. Because here's the thing. This isn't just about credit card rates. This is about who gets to build wealth in America and who gets trapped paying for other people's wealth forever. Let me show you exactly what this 100 billion wealth transfer looks like, because the numbers are absolutely insane. Right now, 195 million Americans have credit cards, and they collectively owe $1.23 trillion in debt. That's trillion with a T. The average American household that carries credit card debt owes $9,326, and they're paying an average interest rate of 22.25%. But here's where it gets really messed up. Last year alone, Americans paid $160 billion just in credit card interest. Not principal, just interest. That's $160 billion that went straight from American families into the pockets of Visa, MasterCard, American Express, and the banks. Now, let me put this in perspective for you. Warren Buffett, arguably the greatest investor of all time, has averaged about 20% annual returns over his entire decades-long career. That 20% return made him one of the richest people on the planet. But right now, the average American is paying credit card companies 22.25% more than Warren Buffett's legendary returns. Think about that for a second. You're paying credit card companies a higher rate than what made Warren Buffett a billionaire. So when Trump says he wants to cap rates at 10%, we're talking about cutting that $160 billion interest payment in half. That's $80 billion that would stay in American pockets instead of flowing to credit card companies. And that's exactly why Wall Street is having those emergency meetings. So here's exactly what went down and why this is moving faster than anyone expected. Last Friday night at 11:47 p.m., Trump posted on Truth Social, effective January 20th, 2026, I, as President of the United States, am calling for a one-year cap on credit card interest rates of 10%. Now, most people thought this was just another campaign promise that would get buried in political bureaucracy. But here's what caught everyone off guard. Republican Senator Roger Marshall immediately announced he is already drafting legislation with Trump as in full support. And get this thing has bipartisan momentum that nobody saw coming. You've got Alexandria Ocasio-Cortez and Anna Paulina Luna backing similar bills in the House. Bernie Sanders and Josh Hawley already tried to pass this exact same 10% cap last year. So we're not talking about some pie-in-the-sky political fantasy here. We're talking about actual legislation with real momentum behind it. But here's where it gets really interesting. Within 48 hours of Trump's announcement, the American Bankers Association released a joint statement basically saying this would be devastating for millions of American families. And then, and this is the part that shows you how panicked they really are, a fintech company called Built immediately jumped on the opportunity and started offering 10% APR credit cards as a marketing stunt. They're basically calling the big banks bluff in real time. So right now you've got this massive political and financial chess game happening, and most Americans have no idea they're the player being fought over. Now,
if we look at the Q3 projections
show you exactly why the banks are absolutely terrified, because their argument actually makes sense from a pure business perspective. Right now, credit card companies use what's called risk-based pricing. Basically,
29% interest to compensate for that risk.
They charge you 29% interest to compensate for that risk. If you have great credit, they might only charge you 15%. But here's the thing, if they can only charge everyone a maximum of 10%, that completely destroys their risk management model. They can't afford to lend money to risky borrowers at 10% when those same borrowers have a 15% chance of never paying it back. So what do? They stop lending to anyone with bad credit, period. And we've actually seen this exact scenario play out before. Back in 2010, Congress capped the fees that banks could charge retailers when customers used debit cards. The banks said it would hurt consumers.
It's not working at all.
And then guess what happened? Banks immediately eliminated all rewards programs.
Portion here, we can have this deposited immediately.
Nothing.
Okay, so
they cut off access for millions of customers and made the remaining customers pay annual fees that never existed before. The Bank Policy Institute estimates that a 10% cap would eliminate credit access for over 14 million American households who rarely pay their balances in full. These people would be forced to go to payday lenders who charge 400% interest, or pawn shops, or just get denied credit altogether. So when banks say this policy will hurt the very people it's supposed to help, they're not lying. They're just not mentioning that it would also save the other 180 million cardholders about $80 billion a year. But here's where this gets really controversial. Here's where this whole thing gets really messy. Because we're not just talking about banks and credit cards anymore. We're talking about the foundation of how the American economy actually works. See, our entire economic system is built on consumer spending. About 70% of GDP comes from regular people buying stuff. And here's the uncomfortable truth. A huge chunk of that spending happens on credit cards. Americans are currently carrying $1.23 trillion in credit card debt. And they're spending money they don't actually have to the tune of hundreds of billions of dollars every year. That fake spending is keeping companies like Amazon, Apple, and Tesla profitable. It's keeping their stock prices high. It's keeping unemployment low because all that spending creates jobs. So when Wall Street sees a proposal to cut credit card rates in half, they're not just worried about bank profits. They're worried about the entire house of cards collapsing. Think about it this way. If 14 million Americans suddenly lose access to credit cards and another 50 million Americans can only spend what they actually earn instead of what they can borrow, what happens to consumer spending? It drops. And when consumer spending drops, corporate revenues drop. When corporate revenues drop, stock prices drop. When stock prices drop, 401k accounts drop. When 401k accounts drop, even people who never had credit card debt start feeling poor. This is why you're seeing this weird political situation where Trump has own biggest donors, the banks and Wall Street firms that funded his campaign, are now actively working against his policy. From an investor perspective, credit card debt is basically free money. Americans pay the interest, companies get the spending, shareholders get the profits. It's a perfect wealth transfer machine from the middle class to the investment class. But from a human perspective, it's destroying people's financial futures one minimum payment at a time. And that's the real controversy nobody wants to talk about. Now let me tell you something that's going to make a lot of people uncomfortable, but I don't make these videos to make friends. I make them to help you understand how money actually works. This credit card rate cap is one of the best things that could happen to American families, and here's why. We need to reject more people from getting credit cards. We need to reject more people from getting car loans they can't afford. We need to reject more people from buying things they have no business buying. Because the reality is, sometimes you just can't afford stuff. And I know that hurts people's feelings, but feelings don't pay bills. Right now, credit cards have become a weapon against people who don't understand how they work. If you don't know that paying the minimum payment on $9,326 of debt at 22% interest will take you 47 years to pay off and cost you $28,000 in interest, then you're walking into a financial minefield blindfolded. And here's the thing that really gets me. 61% of people with credit card debt have been carrying that debt for over a year. These aren't emergency purchases. This is a lifestyle funded by borrowed money. Look, I'm an investor. I understand that when people spend money they don't have, the companies I invest in make more money. Amazon loves it when you buy stuff on credit. Apple loves it when you finance that iPhone. Tesla loves it when you lease that car you can't afford. But as a human being, I also understand that this system is destroying people's ability to ever build real wealth. You can't build wealth when you're paying 22% interest to credit card companies. It's mathematically impossible. So when banks say they'll have to cut off credit access to risky borrowers, good. Those people shouldn't have access to high interest credit in the first place. Force them to live within their means. Force them to save money before they buy things. Force them to build actual financial discipline. Will some people get hurt in the short term? Yes. Will the economy slow down temporarily? Probably. But you know what we'll get in return? An economy built on real wealth instead of borrowed money. Families that actually own their stuff instead of paying interest on it forever. And that's worth fighting for, even if Wall Street hates it. Look, I don't know if this 10% cap is actually going to happen or not. Politics is unpredictable, and there are a lot of powerful people with a lot of money who don't want this to pass. But here's what I do know. You don't have to wait for the government to cap your credit card rates. You can take control of the situation right now. If you have good credit and a solid payment history, call your credit card company tomorrow and ask for a rate reduction. The data shows that about 70% of people who ask actually get their rates lowered. Most people just never ask. If you're carrying a balance, stop using that card immediately. Every dollar you spend on a credit card while carrying a balance is costing you 22% extra. That Louis Vuitton bag is not just $2,000, it's $2,140 if you're paying credit card interest on it. And if you're just starting to build wealth, understand that this whole situation is a perfect example of how the system works. The game is designed to benefit people who understand money and penalize people who don't. So learn how the game works. Understand that every financial product, every investment, every policy change affects different people differently. Position yourself to be on the winning side of these changes instead of getting caught off guard by them. Because whether this credit card cap passes or not, there are going to be more changes coming. The economy is shifting, interest rates are moving, and the rules of money are being rewritten in real time. The people who understand what's happening and position themselves accordingly are going to build wealth. The people who don't are going to keep paying interest to the people who do. And speaking of changes that are coming, there's something happening with Social Security right now that could affect every American. And most people have no idea it's even happening. I will break down exactly what's going on and how you can prepare for it in my next video. But if you got value from this breakdown of the credit card situation, the best way you can support this channel is by sharing this video with someone who needs to understand how this system really works. Because financial education is how we break these cycles.